Welcome to a Traders Foundation Group market analysis video. Today we're going to go ahead and do some top-down analysis here on gold. And we're also going to take a look at dollar since we do have a pretty important economic event this week. This week, for those of you that don't know, on Friday, we do have NFP during New York session. So by the end of this video, after we do our top-down analysis, we'll go ahead and talk a little bit about NFP and some of the other reports that we have for this week. So now starting off from the daily time frame here on gold, we're just going to start off by marking off a few zones. And then again, we'll mention some of the recent fundamental events that have been driving price. So let's go ahead and start by marking off this daily support that we do have here. As you can see, candle bodies and wicks showing some pretty big rejections around this 26-24's area. And if we do look at the past, we do have previous candles also reacting just near this area. We also have this new resistance that was made for us basically today as price rejected this 2650s areas during the previous daily candle, as we can see here. Now going on to the 4-hour, we do see that price right now on gold is a little bit indecisive. Now, why do I say that? When I zoom out and let's say, for example, let's finish off these zones here, right? So we have another support that was made for us around 2638. This resistance right here that we marked off around the 2650s, we can move that down slightly, but we're going to take a look at that on the 1-hour time frame. Then I'm going to mark off this 2665 resistance. And as you can see in the past, also working as a support for us. So over here, broke above, retested, built that support, and then pushed towards the upside. Price made a pretty large pullback to this area and again bounced off this area. So it is a pretty strong area of reaction. We can also, like always, zoom out, look at the left, look at the reactions, and you can see that proof right there in front of you. So now, like I was saying earlier, right now gold is somewhat of in a range, as we can see here. Now that we have our zones marked off, again from the daily all the way down to the 1-hour from our intraday levels, we can see that price on gold, we're sort of within this ranging type of area, right? We have a lot of indecision over here towards the left where price just kind of chops around, makes a move towards the upside, downside, up, down, up, down. So very indecisive. We're kind of seeing the same scenario right now. We see price after it got to this 23 area, started to make its way towards the upside, a bit bullish here, right? Until you start to see these large corrections and then no further continuations, just kind of bouncing up and down. So again, showing us a little bit of indecision within this area. If we go and take a look at dollar at the same time, without having to mark off new zones, but actually just quickly we will. We have this new support just around here. Let's take a look at the 4-hour here on dollar. Just make sure we have proper zones marked off. So yeah, doesn't need to be too precise on dollar. We just need to overall understand what's going on. And usually how I do that is by zooming out. So right now, similar to gold, where gold we just saw on the intraday time frames, a little bit of like within that indecisive range. So we have to be cautious of that and we have to adapt to that. If I zoom out on dollar as well, we're also kind of at an area where price seems to be indecisive. You can see that in the past, like indecision here, a little bit of some indecision around this area. Price also over here showing indecision. Multiple times you can see indecision here, and now we're starting to get a little bit of indecision, right? Again, if we zoom in, let's go on to like the 4-hour, you can see that very clearly where price from that Trump election where Trump got elected the USA president, as we've talked about before, you started to see that dollar rally. Price basically peaked over here at these highs, and now we're starting to break that structure. But the break of structure isn't like clean in the sense that it's just breaking structure and we're just continuing to trend towards the downside, correcting this move. That's not the case. Right now, what we're seeing is we are showing a bit of a slowdown, on this pair here on dollar. But overall, just kind of chopping up and down where price just does not make new lows. It's not really making any new highs. Again, just kind of staying within this range here, just like we saw in the past. So we'll zoom out one more time here on the 4-hour. And you can see the indecision within this area on the 4-hour. And again, just a somewhat indecision within this area. So again, this is interesting to see because at the same time, we're also seeing the same thing on gold. And now this does make sense in the sense that a lot of the fundamental information that we've talked about from the Trump election, some geopolitical tensions that we got during this week over here, where we had this strong bullish push on gold, then price showing these large corrections again overall shows us that for the moment there isn't a clear bias, because if we had a clear bias, then we would be trending bearish from that Trump election. If we had a clear bias from the fundamentals, we'd be trending more bullish from those geopolitical tensions that we got. But right now, instead, what are we seeing? A lot of just up and down type of movement, not giving us the best conditions at the moment. But what is crucial this week is, I'll pull it up right now. Again, other than the NFP report that we have at the end of the week, which you can see here, it's on Friday, 8:30 in the morning Eastern hour. So that's December 6th of this week. We have to watch out for the NFP, the unemployment rate. But we also, throughout the whole week, we do have to look out for these labor market reports. Tomorrow at 10 in the morning Eastern hours, we do have job openings. Day after that, we have to look out for the ADP employment change. Day after that one, we have to be on the lookout for the initial jobless claims. And then the day after that, again, the NFP. So it does seem like the labor market data this week is going to be the main focus. And so really, just without diving too deep into it, going based off the information that the central bank has given us, the Federal Reserve, of course, we're talking about here, they're at this moment very data dependent. So this is important for us to know, because now we understand, okay, if the Fed is data dependent and we have multiple labor market reports coming out in the next couple of days, this for us traders can be looked at as crucial pieces of information. Because if we are to see, like, let's say we did our top down analysis, we have our technicals marked off. Before diving into some trade ideas, let's talk about some potential scenarios that we could see this week, right? So again, we are within this range, but let's say, for example, we get some beautiful, clean conditions, beautiful one-sided information, and the markets start to respect that information and price in that information. What we could see, for example, is if we get healthy labor market signs throughout the whole week. So that means whether it's the job openings, the ADP employment change, jobless claims, NFP reports, all of those labor market reports, if they show optimism for the US economy, then remember this can be looked at as inflationary for the US, which means that for dollar, this period that we're looking at, if we do get those healthy signs of the labor market, we can see easily continued push towards the upside on dollar, which of course, as we understand, this correlates with gold, can translate to further sells on gold. And it's possible that once we do break back below this 2620s, it's possible that the bears will kick in with more strength and we can see some continued pushes towards the downside. But in my opinion, we are going to have to see some healthy labor market figures. And then it's really just vice versa, guys. If we are to see some very pessimistic data, let's say we get some bad labor market readings, excuse me, then what is that going to do? That's going to push that Fed rate cut narrative, meaning that dollar can, at that point, if you do get those bad labor market reports, then dollar can actually start to turn a little bit more bearish. And especially once you start to see dollar back below this 105.700 area, then it is possible that you are going to start to continue seeing some corrections over here. Right now, taking a look at this from a technical perspective, again, we did break that structure on the intraday timeframes, but if we are going to be trading above 106, then it is possible that dollar will just stay bullish. Once you start to see dollar trading below 106s and trading below this support here at 105.700, excuse me, then that's where it's most likely that we will see those bears kick in on dollar. And again, we'll be able to correlate that with gold at the same time. So with gold, just before we end off this video, just to kind of give off some ideas, personally, I would avoid trading in a range. I would much rather wait for price action to really give me a strong candle close above 2649s. So that way we can look out for continued buys, at least short term, up into this and up into these highs here. And then if prices to pull back below 2636, let's just measure how large of a range this is. So it's about 100 pip range. It's a pretty big range. I would also wait for price action to just trade and give me some sort of break and retest setup, whether it's for the sells or whether it's for the buys. Because if price action is just going to be ping-ponging within this area, that's not really going to be ideal. I would not want to be forcing buys at the support or sells at the resistance when price is somewhat indecisive at the moment. It would be more ideal to wait for the proper candle closure above or below and then go based off of that. To get those further continued moves, let's say for the sells, then we would have to be trading below 26.23 like I mentioned earlier, and we have this minor area of support around here. And then vice versa. If we are going to be trading above 26.50s, we show strong technicals here for the bulls on gold, and we get further breaks back above these highs. And then these would be the ideal situations, again, for me to trade within this area. Although, yeah, sure, there could be some moves within that area. You do increase that chance of you being stuck inside of that range. You know, this is where you get those headaches with wanting to see your trade go in your favor, but you're trading in a range. And so things can get a little bit trickier there, guys. But other than that, we're just going to keep it simple for this video, and I will see you all in the next one. Take care, everybody.